Hey everybody, it's Pete. Good morning. Welcome to Stock Trading Pro. Today's Stock Market Live is going to be jam-packed. We have a ton of stuff to talk about today, specifically the CPI data that's coming out today, bank earnings coming out tomorrow, Taiwan semiconductor earnings coming out tomorrow. If you have been a little bit, especially on the day trading stocks area right now, where you've been a little bit frustrated the last couple of days, this is really when you have had to earn your keep as a trader. It's been a little bit choppy. The volume's been a little bit lighter, but that's to be expected. We're actually waiting for the inflation data. Has inflation peaked? What does that mean for the next move in the market? Will the bearish side of the market get caught off guard if the buyers step back in? We got a bunch of stuff to talk about today. I actually wrote everything down because I want to make sure we cover everything. We're going to talk about inflation data today. We're going to talk about earnings. We're going to talk about the trade of the day from yesterday and how you could have taken care of it, because we were watching this one level in this stock. And I really want to bring this home in a big way because it's something that is really confusing for people that love to trade but just aren't really kind of on that other side of the fence where they're actually doing it for a living, which is win-loss percentage is the biggest bunch of garbage you've ever seen in your life. It's about, did your account go up? And we talk a lot about this in our private community. I'm really excited about today's topic, where one good trade can make your entire week, as long as you manage your risk, which is another thing we're going to talk about this week. I actually wrote it down, how to reduce your overwhelm and stop over trading by very specifically having incredibly tight criteria for when you decide to get involved. We're also going to talk about sector rotation, and then we're going to break it down into stock picks. We have a ton of stuff that we're going to talk about right now. But first, I just want to remind everybody about this. The Wealth 365 Summit. You can see it's actually going on this week and actually ends on Saturday. There's speakers all day today starting at 9 a.m. You can get an idea of the speakers that are talking about now. Rob Hoffman is actually the person running the entire thing. He's a super guy. So you can see there's a lot of topics, including options, stocks, futures, Forex, trade setups. So what you want to do is you want to make sure that I have a link to register for this below this video in the description. Absolutely get in there, sign up. It's absolutely free. There's no cost to it whatsoever. Even if you can't attend these sessions live, make sure that you register, because you'll get updates and emails about going back to watch the replays. I'm actually going to be doing a presentation at 10 o'clock tomorrow morning. So look, it's 6 days of training for free. If you're here at 7:30 in the morning, some of you might be watching this video later. Absolutely sign up for it. That trading education is going to be worth your time. And who knows, maybe you might find something that you might want to take a little bit deeper than just watching the free stuff. So we got a bunch of stuff to talk about today. I'm really excited. What I really can't wait to talk about is the one big trade that we had yesterday that pretty much paid for the entire day. And I'm going to show you how we were watching it, how the first couple of times the trade paid off in a small way. Yesterday, it made the entire week. That's how big that trade was yesterday. And we'll get into that in just 1 second. Okay, so thank you so much for joining me here today, everybody. I'm really excited to share this with you. We got a ton of stuff going on. I just want to say hello to a couple of people. Brian Carr, my pal. Tim, good morning. Minvai, entrepreneur, real estate investor, and taking his kids to soccer every weekend. Good morning. The options program. Yeah, actually, that's in full swing right now. Really excited about that as well. Don, good morning, my friend. Who else we got in here today? Juan, good morning, man. How's it going? All right, let's get right into it. I want to respect everybody's time. Obviously, the big conversation today is this, the inflation data. Now, if we're reading the tape, obviously 4-decade high. The big thing now is I saw some articles yesterday. Inflation has peaked. How does anybody know it's peaked yet? The number hasn't even come out yet. The conversation that's coming in now is energy prices getting crushed. So let's actually take a look at energy. I want to specifically take a look at oil, crude oil, and the big level that we're at right now, and whether or not we're going to crack through that level and have a whole new move to the downside, and maybe even start to dig into the energy stocks on the short side and a little bit more aggressive. Now, here's the big thing. When you are reading the charts, as we're doing order flow, tape reading, technical analysis, whatever language you like to use when you're looking for the best stocks to buy, you want to have energy. One of the biggest things that we talk about, and I'm not talking about energy stocks, you want to have big candles. When you have big candles, we call that energy. The opposite of big candles are what we call melted candles. Melted candles represent indecision. And I'm going to show you what I mean by this on the chart of Chevron, CVX stock, and how that's playing into the big level in crude oil right now. And this is all tying together into the CPI data that's coming out today. So if we go over to Chevron, and like I said, one of the top stocks that I've been trading, you'll see that the big breakout level that the stock had way back in March was right here at this level, which is where we're starting to see this. So what I want to get across to you right now, and this is really important, one of the most important things to do as a trader, whether you're buying stocks or whatever you happen to be trading, you want it to be simple, you want it to be repeatable, and you want to have an answer like that. You need to know the structure of what price action needs to look like so that when you're making decisions, you're not overthinking. You're like, that means that, which means I make this decision, right? So when looking at this chart right now, there's only two things I'm looking for. Out of all the thousands of things you could be looking at for candlesticks and what they mean, that's a big thing. I'm also going to walk you through one of the coaching calls that we had recently and some really big topics, which gets into the minimum viable trade information. Energy candlesticks are where there's a big distance between the open and the close. We all know that that means that there's a big bodied candle. That essentially means that the smart money, let me actually zoom out here a little bit. That essentially means that the smart money had their attention on their stock and they spent real money to create that big red or big green candle. Sometimes they're buying, sometimes they're dumping, but either way, energy is institutional attention. Keep it that simple. How long has that institutional attention been happening? Is it an hour, a day, a week, a month, maybe even longer than that? This is where trading becomes a lot less stressful, easier, quite honestly, when you're just paying attention to say, okay, there's energy over there and it's happening for a while. I'm going to look for a spot to piggyback those guys. The opposite of energy is indecision. Indecision happens when you have a stock open here, it trades all the way up there, goes all the way down there, and kind of opens and closes in the same place. We call that a melted candle where the body is smaller. So I'm tying this all the way back now into Chevron, where we had plenty of energy over here. We finally broke out. And then you can see we're mostly dominated by melted candles where there's a lot of indecision and the stock really did not move. We actually then ended up having energy to the downside. A lot of other stuff came out, but this is really what I'm looking at over here. 1, 2, 3, 4, 5, 6, 7, 8, 9, and 9 indecision candles right at the support level at the same place that crude oil futures are hovering right at that same level. And now we actually have a bullish U-turn, which again, we'll describe what a bullish U-turn means. It means that it actually went down through the previous candle, reversed back up, and obviously it's still unfolding right now, but essentially the sellers could not push it down. So you got some selling continues down and then reverses. And you know what? I'm actually going to give you a visual of this because this is a part of what we do in our community. I'm going to give you a little extra bonus, and you want to take a snapshot of this because it's pretty cool to have. Let me actually give you this guy right here. Right here. I'm going to pull this into the video right now, and you want to take a snapshot of this. So what happens with the bullish U-turn is you're seeing bearish momentum. And when I'm talking about momentum, essentially what we're talking about is the individual candlestick. So you can actually see momentum on 5-minute charts, hourly charts, daily, weekly, or monthly. It doesn't matter the time frame. It's whatever time frame matters to you, right? So basically what we're looking at for bearish momentum is well-offered candles. Well-offered candles simply means lower lows, lower highs. And when you have consecutive lower lows and lower highs, that means the immediate momentum is bearish. Smart money is selling down, and they are what we call holding the offer. They're not allowing prices to go up. So they're creating lower prices with supply on the market, and they're not allowing it to go up because the overhead supply is creating a lower high, from the previous candle. So a bullish U-turn, if we could think about, we're watching that momentum go down, it's pushing down, and then another candle comes in, it pushes down, but then buyers step back in. So that means that somebody at that point either recognizes it as a value level or the sellers could not push it through that level. So this is really a part of order flow and tape reading. But what we're talking about right now is more about tape reading. So let's first take a look at what that means, the definition of bullish U-turn and what it looks like on the chart. So you can kind of burn that into your memory, maybe take a screenshot of this, have that look over to the oil market, how that translates into the melted candles that we're seeing in CVX, and whether or not the energy stocks are now ready for a bounce and maybe short-term momentum plays to the upside, leaning on that big support level that we just saw which is being held up by that bullish U-turn. So first take a snapshot of this bullish U-turn, and we're going to tie this all the way back to the inflation, okay? So here's the bullish U-turn, and you can see we have like some really clean, some really cool, fancy graphics here. But this is the most important part. Successive, well-offered candles. Then this candle here pushes down, reverses back up, closes above the open, which makes it a bullish candle, and most importantly, closed above the previous low. Now, if we tie that in with what we're looking at over here in crude oil, you can actually see a big energy candlestick, no pun intended, pushing down. And now the current candle at this significant support level, which again, this is not coincidence. Think about it. Smart money has deep pockets and deep research, right? Every single time, whether it's a commodity, a futures market, or a stock, at some point, they hit the bell and they're like, hey, everybody, there's value at this price. And that's where they start to get in and start to build their position. Now, this is very important because this is a big part of learning how to trade with a lot less stress, is learning how to work those positions. Again, if you don't know, I had my trading floor in New York City. I traded NASDAQ. I had a bunch of people from the New York Stock Exchange who were specialists come up to my floor and trade together. That's where we created the method that we use, which is the New York method. They walked us through the same way that we taught them for NASDAQ trading, how to spot when the smart money is building positions. Smart money doesn't go in and say, hey, I'm going to get 5 million shares right now. But for some reason, us as retail traders, we think we got to get that exact spot and go in full share size on that initial entry. And it's really, really challenging to do that, to expect that you are going to get the exact spot at the exact moment and fight all of that research and all those deep pockets. I want to give you a little bit of a mentoring lesson right here. Learn to work your orders and take all of that pressure off of yourself of trying to get the exact spot. I want to say this, though. There are certain positions or certain situations where you might have that A+ scenario unfolding. You can definitely get in there with more aggressive initial position size. But just think about this. You're putting on your first trade, looking for feedback from the market to determine whether or not you got that spot. If you did, fantastic. Work that position and you got the perfect entry on that spot. But let's be honest. How often do you get the perfect entry where the thing never moves against you at all? It's just less stressful to learn how to work that positions. And why can't we take that same clue from the smart money? So if we're taking a look at this, it doesn't mean that all of this selling is done. It means that somebody saw value here the same way that they saw value here. Now, obviously, economic conditions, the unfortunate situation going on in the Ukraine right now, there's different pockets of and moments of opportunity that are creating different value areas. But right now, I'm getting a little bit interested on this bullish U-turn in crude oil and the melted candles in Chevron at this level. Now, I want to be clear about this because one of the biggest things that comes up in a conversation is basically that means you're bottom fishing. I'm not bottom fishing. I'm putting the pieces together. If crude oil holds this significant level, if these melted candles follow through, if we end up seeing this bullish U-turn turn into a well-bid candle where, let's say today, finishes that way. Again, I'll pull up the bullish U-turn for you so you can get an idea. This is what we're looking for. This is the current candle on crude oil. This is what we're looking for to follow up. So if you want to really learn how to elevate what you're doing, and again, we actually had a conversation the other day about somebody saying being in a profitable position and being afraid of a reversal candle and getting out of good trades too soon. Don't be afraid. Be prepared. There's such a big difference in your trading, whether you're buying stocks, options, it doesn't make a difference what it is. Be prepared. You will never be afraid as long as you're prepared. So how do you be prepared? So let's talk about what we're looking at here in energy and how that's going to translate into a trading scenario. So we know that this is a big level. We know that crude oil down here is at a big level, and this is the reversal. So now, again, we're going to talk about what we want to see next. If this level in crude oil holds, if this bullish U-turn in crude oil closes near the high, if the next day we go well bid, which is a higher high and higher low on the crude oil, then those melted candles at support in Chevron will most likely hold that level and will start to have a short-term move to the upside. If that happens, then I will start to build a position in CVX Chevron stock at that major support level because crude oil found a bottom and is starting to reverse. Does that sound like a lot? Let me ask you a question. I'm sure you worked really hard. All I did was put together, if this happens, then I plan to do this. So the question I have for you is, can you do that? Can you say, if this happens, then I plan to do this? But here's the thing, and this is where traders get in so much trouble, is if this happens, I plan to do this, right? We can all agree upon that, right? And then you take action. If this happens, but it does not unfold, and you still trade anyway, that's on you. That has nothing to do with the specialists, the market makers, the algorithm, the big money out to get you. That's on you. You made a plan and you didn't follow it. So what's going to be really fun with this right now is watching this together. So right now, Wednesday morning, 7:30, 7:45 in the morning, we already mapped out a trade scenario for a potential short-term reversal in oil and the oil stock that I actually trade the most, which is Chevron. So we made some money on the way up a couple of months ago, on the way down. Now we're looking to see if it bottoms out. I'm not guessing. I'm not going in full position. I am thinking and acting differently, which is what somebody who takes this seriously is, what are the reasons that I want to be a buyer of this stock right now? How many good reasons can I put into this that basically says there's a good chance my profit target's going to get hit versus my stop loss? That's all good trading is. The last part of good trading is saying, if I do everything and exactly what I thought was going to happen unfolds and the trade follows through, cool, I'll make some money, which we're going to turn that into the trade of the day from yesterday. But here's the part that a lot of traders get all hung up on. And this is getting back to that win-loss percentage stuff. I want to tell you right now, I have no idea what my win-loss percentage is. I don't care. All I care is, did my account go up? And the reason I'm saying that is because I can sometimes work a position where I might make 3 different small entries in a position before it either works out or it doesn't. So it's really one idea, but I might have made that same working that position 3 trades. So what's my win-loss? I've made 3 different trades for the one position. I don't care. All I care about is managing my initial trade until I get a head start or until I take a small loss. That's the part that a lot of traders get hung up on. Maybe you, where you're like, oh, I took a loss on that trade. It's the end of the world. It wasn't a good idea. You can do every single thing right and still not make money on the trade. It could be the greatest setup in the universe. The sun could be shining in, light the sun on your enter keyboard, on the enter key on your keyboard. If you did everything right and it was a great setup and it didn't make money, it's still a good idea. It's just an idea from your edge that didn't follow through. Provided you do that and you take your losses where you're supposed to, you keep losses reasonable, you will then position yourself for this. Okay, now we're going to talk about this stock from yesterday, where one trade can make your entire day. So we've been watching, if you've been a viewer of this channel, if you're a regular viewer, which, gosh, I really hope you are, and if you haven't done it yet, please do me a favor, click down and subscribe. I really hope that you're getting some value out of this. We've been watching and talking about Boeing. Now, most of the industrial stocks have been getting hit, but we've been trading, and everybody in our community can vouch for it. We got a bunch of people on the call right now. 140, 140, 140. We keep trading it around 140, right? Last week was ZM around 115, last couple of weeks. So Boeing finally hit that level yesterday, and it didn't come back. Now, the math, the basic third-grade math that I want to get across to you is very, very simple. You're going to end up having small losses, small profits. Some trades follow through and come back. Some trades don't follow through, you take small losses. As long as you're going like this and you're paying the bills and you're going back and forth and understanding that it's not your ego, one trade can pay for your entire week. And now specifically, we're talking about the day trading side of things. And now we're looking for the swing trade to pick up and follow through. So this is what I'm talking about right now. Let me actually go here and go here. One trade. Now, you might be like, oh my gosh, how could I, that's amazing, but I would have missed it. This stock was flagging all the way up. This is trading 101, where you're looking at bull flags and bear flags and breakouts. One of the easiest trades you could have made yesterday, and it actually got beyond the average true range, traded through. We shifted over to profit maximizer. Now, I just want to say this in a instructional way, because I get a lot of questions. Why are you doing this? I'm doing this because trading's hard, and I want to pass along some of the ideas so that you are thinking through What do I need to see in order to place a trade? One of the biggest things that we get from members of our community, especially new bootcamp members, how do I see everything at 9 o'clock at night, but I don't see it when the market's open? And what I'm talking about is this, right? It's so obvious. It's pushing up, right? And pushing up and pushing up. Well, if you missed it, number one, you need to work your keyboard a little bit better. You need to do your game planning. You need to have the levels. We've been talking about this level for a couple of weeks now, 140 being the level. So we already had the alert set. We already had it in our radar, right? It was in our mental universe and in our game plan. But here's the part that a lot of people miss. I missed the entry, right? That means that you don't look at the market for something specific. So I'm just going to give you an example. So one of the things we look for, you probably heard me talk about it 1,000 times here on these videos, is a push and a pause. We're constantly looking for momentum, especially in the direction of order flow, and then we're looking for a pause to manage the risk. If you're a regular viewer of the channel, you probably heard me say that 1,000 times, right? Well, let's take a look at what happened in Boeing yesterday. So if you're looking for it before it happens, you're going to be ready as opposed to surprised. Remember, every single thing that I hope I'm teaching you is being prepared is where the money's made. After the market opens, you're just looking for entries and managing. That's it. If you are messed up and you can't find something to do after the market opens, that just means you need to level up just one little level higher. And I'm going to show you my research in a second, okay, to give you an idea what it's like. So again, getting into the trade, we've had 140 as the level. We have a push and a pause, 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 and then finally slows down. Do you think you could spot that if you're ready? That's a $9 move in one day in a $140 stock. We're not talking about trading Tesla stock. This is not an $800 or $700 stock, whatever Tesla is right now. It's $140. Was it a miracle we found it? No, it was in our game plan every day, which actually now takes you to the next part of understanding how to trade, which is really digging in and doing your game planning. So when we get into the research and we start to do the sector rotation every day, and let me zoom this in just a little bit for you. You need to follow the money. So you can see how we're following the money from heading into Monday. Pretty solid last 5 days. So we started to look at communication services, consumer cyclical. And believe it or not, Apple was carrying the market a little bit higher, heading into Tuesday and now heading into today. So heading into today with the CPI number, and based on what we're looking at on that screen right now, can you look at that screen and say, wow, they're really doing something obvious. I can't wait to buy those stocks with them. In this particular case, you can't, which now means we need to dig a little bit deeper into stock specific ideas to be the best stocks to buy today. So now I'm going to walk you through how I do that, which is, remember how at the very beginning of the call, we talked about having your minimum viable criteria. That's a big part of what I just want to bring this up and hopefully get you to think this thing through just a little bit. So how to reduce the overwhelm. A lot of people are really confused by what's going on in the market now, and stop over trading. So I'm just going to challenge you and ask you, what is your minimum criteria? What's your minimum criteria? So I'm going to challenge you right now, after this call, before the market opens, having a cup of coffee, pour your coffee. This is actually my second one today. I'm surprised I'm not talking faster. What is your minimum criteria? And I'm going to say this specifically. If you happen to be day trading the last couple of weeks, even swing trading, because the market's been kind of stuck, other than healthcare stocks, if you found yourself over trading, that simply means, again, I'm going to go back to being prepared and getting chopped up. If you've been chopped up a little bit, it simply means that your minimum criteria to determine a trade is not clear. So I'm just going to give you an example. And this is not everything that we do, but again, we do stacking the order flow, then we read the tape, and then we look for the optimal entry. So that's the kind of the three pillars of the way we look at ideas. But within the order flow and tape reading, you need to know what that looks like. So just for example, maybe you might decide that I'm not going to buy a stock unless it's positive from yesterday. Maybe you might decide I'm not going to buy a swing trade unless it's above last Friday's high. So when you start to have this criteria, this is the big thing, and this is the stuff you want to write down. When you have criteria, you're no longer lost, and the market gets simplified. And here's why. You're not looking for everything. You're looking for something. So if you're getting beat up by the market right now and you feel like every time you put on a trade, it's moving against you every single time, you're being disciplined, you're taking small losses, it simply means that you need to refine or add to that criteria. It could be yesterday's close. It could be yesterday's high. It could be today's opening price. It could be Monday's opening price. It doesn't make a difference. Maybe you only buy stocks that are above yesterday's high by 5%. You don't even look at anything else. Those criteria, the more criteria you add, and again, you probably heard me say this 1,000 times, the more pieces to the argument that you build. Now, the argument is, what are the reasons to buy this stock right now? What are the reasons to take risk? You probably heard me say that. So if I say to you right now, Boeing is a good stock to buy, you should be saying, why? Give me all the reasons why. You need to start doing that for yourself. So if you are one of the people right now that reach out to our support staff and say, I'm confused, the market's overwhelming to me right now, I knew how to trade in 2021, I've completely forgot how to trade in 2022. It's not that you forgot how to trade. You need specific criteria, and then if it's there, go get them. If this is your criteria and it's not there, you know what? Do what we do. Have a cup of coffee, post pictures of your vacation to Mexico, and save money. Trading is not about active, unless there's something to do. But when it's slow, based on your criteria, it's perfectly okay to take a step back, because learning how to save money on trades you shouldn't be in the first place, you're not digging yourself a hole now, because when it's obvious, it's pretty darn easy to make money. The challenge is, what does obvious mean? And then when do you trade when it's obvious? And then the next step after that, which, by the way, this is another big part of it, is when you have obvious, you need to make what you're supposed to. So if we go back to that chart of Boeing and you get that kind of an idea unfolding during the day, you know what? If that's a trade you should have made $1,000 on, you can't make 300. You need to also have criteria to hold your winning trades. That's a really, really big part of trading. All right. So that's the idea from yesterday, but more getting into the specific criteria. Some of you have been in our boot camp. I just can't explain how grateful I am. We actually have some people in our community now for the third year. That's how grateful I am that we have some people in the community. Actually, Min is typing in here. Let's see. I just want to get into this. Is it a good idea to do the 2-week trials or another one? We start everybody out with a 14-day boot camp. Some people go right into the annual, just make the investment in themselves. Completely up to you. Reach out to our support staff. There's actually a link below here. And Min, I just want to thank you very much for helping out here. Really appreciate it. So I want to get now into some of the ideas. We're actually going to talk now about some of the ideas that I'm looking to trade today. So we just went through sector rotation. We just took a look at that, right? So here's what we're looking at into today. So I just want to say this again. If everything on that sector rotation screen in multiple time frames, multiple order flows, is either white or red, what should your conviction level be going into today? Again, this is prep work. I had my trading floor. This is the stuff I did every day. If everything on the screen is red or white, this is going into today. What should your conviction level be for taking aggressive price action, for how you plan to work trades? I'll tell you what I'm doing. I'm not going in with full position size. Now, we can have a dramatic move when the CPI numbers come out today, right? About half an hour from now. If that happens, again, if then, I'm never going to be surprised. If this happens, then I plan to do this. If that happens and we pick a direction, and if it's in the direction of that longer term bearish move that the market has, and let's actually map that out right now, in the direction of the longer term bearish move in the market, which is this push here, you can see that we're consolidating. If we push down, now, this is an advanced lesson, but this is stuff that you really need to know. If the obvious order flow is bearish right now, which is to the downside, selling pressure for all of 2022. For me personally, that means I'm going to trade a little bit more aggressive with share size and hold trades longer, because today's price action matches the bigger picture. If it shows that inflation is decreasing, it has peaked, and we get a surprise to the upside against all of this bearish action for 2022, I'm going to be looking for momentum trades to the upside, but they will not be as aggressive on the positions, because we are trading against all of that. So momentum trades versus order flow. So this is the part that you want to write down. Momentum and order flow on the same page, meaning they're in sync. That means that our conviction level should be a little higher. That means maybe hold a little bit longer, maybe more positions, maybe a little bit more share size. If momentum order flow is down and momentum is up, we can still take those trades, but that just means that we're trading with the current order flow and momentum, not the big picture. So if we have a reversal to the upside, mark my words on this right now, it's going to be a shock, and we could see a very fast move to the upside. I don't know how it's going to last, how long it will last, but it will be the surprise. If we get the surprise to the upside coming out of this big move here, that's going to be a little shocking. So these are the parts of being prepared. So what I want you to do now is take a screenshot of what I'm about to show you. I promised I'd give you some ideas. So this is the list, part of the research that I'm looking at for stocks that are in my game plan. Again, to show you an idea how prepared you need to be, you need stocks on the bullish side of the market in case we get a move to the upside and the number is better than expected. You need ideas on the other side of the market. Again, if you're overwhelmed right now, 90% of that overwhelm is having structure and being prepared. After the market opens, and it doesn't matter if you're day trading or swing trading, you already have the stocks and the direction that you plan to trade. Then it's just a question of, okay, the market's going up today. Let's look for some spots to buy. Is that an exaggeration? No, it's not. It's not. If your trading is more stressful than that, that just means that you need to learn a little bit more prepared. So I'm going to put it on the screen right now. You can take a look at this watch list. And I just want to talk about the bank earnings. So obviously we're talking about heading into tomorrow. Tomorrow's JP Morgan. We also have Taiwan Semiconductor. We also have Morgan Stanley. Actually, let me highlight that one for you. And then tomorrow we have Citigroup, US Bank Corp, Bank of New York, State Street, PNC, Wells Fargo. So those are the bank. That's tomorrow. That's Friday. This is today. But then we're going to take this one step further and give you an idea of some of the ideas. Let me actually zoom this out here for you. So these are the ideas in the watch list for today. And then these are the top stocks that meet the criteria, which obviously you can see NVAX has been at the top of that list for a while. So we got a lot going on this week. If Monday and Tuesday you found it a little challenging, I'm pretty confident that Wednesday through Friday is going to have some really good tradable volatility. The one thing with the banks, they've been kind of stuck in a trading range, specifically like Wells Fargo and Citigroup. If we take a look at those guys again, and these guys are the ones that I really have enjoyed trading the most. They're still kind of stuck down here in this box, and I really want to see them get out of this box in order to have a little bit more conviction. So you got Citigroup, Wells Fargo, Morgan Stanley. You get the idea. They're pretty much in bearish order flow right now. So, man, I really hope that you're ready. Man, woman, child, this is going to be exciting for the next 3 days. The last couple of days, there were some good pockets of opportunity. Like I showed you there in Boeing, you have to be prepared. You have to know significant levels. If those levels get hit, got to get in there with confidence and take that trade, whether it makes money or not. If it's a good idea, that's the first part. That's what's most important. So buckle up. We're going to have some good numbers in about a half an hour from now to trade off of. The volatility is going to get. Remember, go all the way back to the beginning of the video and watch what we talked about in crude oil and Chevron at that level. And it's going to be kind of fun to watch those trades unfold over the next couple of days as well. We might see a short-term bottom, but remember, we talked about potentially starting a position if the price action we mapped out unfolds. All right. Have an awesome day, everybody. I'll speak to you soon. Very grateful that you're here with me. Do me a favor, smash that like button. Make sure you sign up for Wealth 365 and really 6 days of free training. How can you beat that? And then also, if you have any comments, leave those below as well. Have an awesome day today, everybody. Thank you so much for joining me. I really appreciate it.